In this how-to session, we're going to get a little bit more serious and we're going to talk about what makes property prices fall. Now, property prices are again similar to any other type of economic value setting mechanism where demand and supply. So when you get low supply and high demand, you usually see values increase. It's no different in the property market, but what actually underlies the demand side? What we're talking about here is we need to look at the economy, and the economy creates jobs. And obviously with those jobs, we earn the income. And when we get the income, we obviously can go to the banks or our mortgage brokers and we can borrow some money. Now that ultimately creates the demand in the market. On the supply side, the builders, the developers, the people who are providing that stock to market are saying, oh, the economy's looking good. There's a lot of people who want to buy our product, so let's create more of that product and get more and more sales going on. You know, with low interest rates, we also tend to see more and more demand push into the market. Now that's all well and good when things are great, and that's what we've seen recently in some areas of Sydney and Melbourne. But what could cause those property prices to fall? Well, let's see. When we talk about this, we're talking about the economic change in the market. So the economy experiencing a downturn. Now that could be a localised downturn, or it could be a global event whereby, Australia is impacted by that. So when that event occurs, we start to see things happen around the jobs. We start to see unemployment rise, people potentially losing some of their jobs. And when we start to see that, it's all well and good that we got the money or we had the income to get the borrowings, but when it comes to actually being able to maintain those mortgage repayments, if we don't have a job, it obviously becomes harder and harder to service that debt, and ultimately we may be forced to sell the property. So we start to see no more jobs, rising unemployment, people who have a bit of mortgage stress also looking to potentially having to sell their property. But we also saw on the supply side, the developers finishing off their stock. So we start to see a spike in supply and a reduction in demand. Now that is also potentially exacerbated by media coverage around property prices correcting. Now that can cause a confidence problem around sentiment, and less people are then confident around the market, again impacting the demand side, but we still see this supply high. So those people who have to sell their properties will sell their properties at a lower price, and that causes the whole thing to start to see property prices correct. So it's important now, and it's always been super important about where you buy property, because not all property is created equal. There are potentially some markets within a city location where this is less exaggerated than other areas. And that's what we try to look for when we're trying to buy the right types of properties in the right area. Almost what we call recession-proof locations. Sure, their values might also come down, but they don't come down as much as some other areas where there may be more mortgage stress or there may be more people who are unemployed. So it's really important to understand that property prices don't always go up, and there will be corrections in the market from time to time. So understanding what is causing that correction is really important when you're going on your investment journey. Thanks for watching.